Hello everyone, Corey Mitchell here with TradeThatSwing.com, and this is your swing trading stock market outlook for the week of June 10th. Keep this one pretty brief because, conditions mediocre mix. That means I'm not really looking at long or short trades at the moment. We'll discuss why. Each week I go through the same process, just looking at some different things depending on which tell me how aggressively I want to be deploying capital. For wondering where this article is, so you can see the updated charts or any of these links, go to TradeThatSwing.com and then stocks, stock market analysis and trades, and it's updated there each week. So let's dig into a couple things. We have a bunch of different indexes up here. So the NASDAQ 100, the S&P 500, a Canadian index, Russell 2000, which is generally the smaller cap U.S. stocks, NYSE Composite, which is a very broad measure of stocks, including all the ones listed on the NYSE. And you can see some differences here. The NASDAQ a little bit stronger, crawled, it got kind of well above this high compared to this one, and then we moved to new highs this past week. The S&P a little bit different, just barely got to that prior high, and then this week just barely got to that high. And then as we go to these other indices, you can see the NYSE Composite, bigger sell-off, didn't really have that rally that we had last week in these other indices. A little pop one day, but then kind of fizzled well off the highs. Same with the Russell 2000, well off the highs, whereas these other two. So we're seeing a bit of a divergence in some of these stocks. We have a couple indices which are, highly concentrated, really, in a few big companies. And the other indices kind of showing that, a lot of other stocks aren't doing as well recently. So that's going to lead to more choppy trading. If you're trading strong stocks, we might be able to pull some wins out, but we are seeing, a lot of stocks not performing as well at the moment. Same with the Canadian index, did climb back to the prior high, but last week kind of weak. So this still in correction, this one's still in correction, this one's still in correction, and then we have two other ones which look like fairly strong uptrends. Let's look at Bitcoin. It's been chopping around this prior all-time high. The prior all-time high was 69,000. It reclaimed that, earlier in the year, and it's just been whipsawing around. I did like this. It took out all these kind of lows. You had this low, this low, this low. And then this one kind of wiped them all out. That was the first time we'd got below this level, which was right after we had clipped 69,000 and then dropped back. So it took out all these levels, and it's just been kind of building to the upside, right? Because we had lower highs, lower high, and then now we have a higher high, a higher low, a higher low. So it's kind of building up, and we'll see. We attempted to break out, kind of fell off a little bit on Friday, but ultimately I like this. If it continues to run up, I like I don't really make too many predictions, but I do like the kind of 100,000 area, nice psychological target, 100,000 to 110,000. That would also align with kind of the historical rallies that Bitcoin has had during a overall bull market, and this is still an overall bull market, even though we've had this little choppy period. So longer term, I like this. Of course, short term, it's been very choppy, so it depends on what kind of time frame you're looking at. But overall, still liking the overall uptrend in Bitcoin. Gold, we've talked about this the last couple weeks, just very whipsawy. And maybe you could find some things you like about this. You can probably find some things you don't like about it. And overall, it's just something I'm kind of staying away from, because it's just, you have a big up day, then it followed by a big down day. Just really whipsawy, choppy. If it's not an easy money environment, I'm generally out. Longer term, we've had these big breakouts. This chart doesn't really show it, but if going out 10 years, 4 years, we've had these really big patterns in gold, and they all broke out. So long term, probably not a bad trade, but right now, just really messy looking. This is kind of looking under the hood of the market. So we have the S&P 500 chart there, which, as we discussed, this one looks not too bad. Some of the other indices not looking as good, and this kind of gives us some additional information. So volume, not really important to me at the moment. The ROC is the rate of change, the percentage daily movement of each one of these price bars. And what I'm really looking for here is 2% down days. Those are a big warning sign. We get lots of them in bear markets, but as you can see, we have been pretty calm throughout this entire up move and even this down move, showing that this was just a correction as opposed to, the start of a big bear market. Same with here, this correction still calm, so showing overall bull market behavior, even though we're still going to get ups and downs, but this helps show that we're still in overall bull market territory. Once you start getting those 2% down days, that's usually a sign to step aside, because it might just be a 1 or 2 day event, but it could also turn into something bigger. So I like to step aside for when those occur, but we have not had any 2% down days in the S&P in a long time. This is the advanced decline line. I've zoomed in so that you can see the most recent price action. And what concerns me a little bit here is that, so we had this high and then the S&P 500 reached that point again. On the advanced decline line, it did not. It made a peak there and it has been kind of trending a little bit lower since then. So that's a bearish divergence, and maybe not super surprising based on that we looked at the indices, and a lot of the two of the other indices, the NYSE Composite and the Russell 2000, which encompass a lot of stocks, are moving lower while the S&P has been moving up. So we have this kind of divergence where not everything is acting good, or as good as maybe the S&P makes it look. This is up volume divided by total volume. Not important at the moment. I'm really looking for extreme values up at this upper black line or this lower black line, and they need to be either above it or below it. And so we've just kind of been in the middle here, nothing important going on. But what these show is either extreme buying enthusiasm, which is good. We usually see that after a correction and as the price starts to go up, or very near a bottom. So we like to see that. Or extreme selling is usually after we've had a rally and we start to sell off. We get those, or in the middle of a bear market, we'll see those big downside days where almost all the volume is in stocks moving to the downside. This is the percentage of stocks above their 50-day moving average, and you can see both are below 50%, meaning less than half of stocks are above their 50-day moving average. A 50-day moving average, just a very crude measure of stocks in at least kind of short-term uptrends. So most, moving lower, even though this S&P has been moving up. This has been lower and, not in a great shape. You can see usually better trading conditions when you have indices moving up and you have this indicator above 50. That's a nice bullish time. Even had a little segment in here where it was above, but overall, kind of flat and below the 50% line. So given all that, that's why I'm opting to just kind of sit on the sidelines right now. It's not ideal conditions. I like deploying my capital in what I call easy money times, not times where it's more difficult and choppy. And have a feeling there's a little bit of choppiness out there. Sectors on the move, I don't typically look at utilities and consumer defensives for personal trading, just because they don't move as much in good market conditions. Main sectors to watch: technology making a nice move, as we saw the NASDAQ 100, which does encompass quite a few technology stocks, had a good week last week. That bumped it up, strongest one over the last month, and making its move back up on the 3-month. Communication services also up there on all three of these time frames, the top performer over the last month and up in the upper half on both of these. And then healthcare also making a surge last week. It was the not as good as technology, but second best performer over the last week, second best performer over the last month. It's weaker over the last 3 months, but maybe this is one that's, kind of had a bit of a weaker period and is starting to come back, so it might be one to keep an eye on. What am I doing right now? I still like the Bitcoin bigger picture, but ultimately it has to continue higher, and it has been choppy in the short term. Gold and GDX very whipsaw and choppy right now. I don't like that. Again, longer term probably okay, but really gross price action recently, so I'm kind of staying out till I see something that's more familiar with the setup side trade. Not considering long stock trades until conditions improve, and then there's always the option to day trade and passively invest. You can check out those articles if you're interested in that. And that's your weekly outlook for the week of June 10th.